Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the CBOE Market Volatility Index, ticker symbol VIX. I'm starting off with this one because today, Friday, we closed with a very well-pronounced hammer pattern right there. That's that little green body with that long shadow below the candle. And that is telling us that the buyers came in towards the end of the day. As we were watching this, the VIX was rallying right up into the close. And it's happening right on that 20-period moving average. Now, if you've been following along with my market reports, you'll know that I have kept this line in place since January back here, where I said we would go down, test that support, and then I put an end target of 41.88 on the VIX for March 24th. Now, while I'm not telling you there's a guarantee that the VIX will get that high by March 24th, it's not hard to see how the VIX is tracking that angle in the rally. And with that 20-period moving average acting as support, if you look to the left here, you'll see that that happens to also be a key role reversal, where back here we had resistance. See the long shadows above the candle, that's a shooting star. So we had resistance that's holding as support. It's that little zigzag. It's something that I teach. So you got to learn that pattern because it works both on the way up and on the way down. And so you have this zigzag here. When resistance is broken, it turns to support. And on the way down, it's the same thing. We draw the horizontal line. It comes down to support, bounces a little bit, breaks, and then turns into resistance. You see that? So these are more or less A, B, C, D patterns that give us key entry points and also exit points, and most especially it helps us with managing risk. Now again, that is a bullish candle for the VIX. So what does that mean for the S&P? Well, I've said this many times, but for the most part, the VIX and the S&P 500 are inversely related. And yesterday something very interesting happened where the S&P and the VIX both closed negative. The VIX didn't close up yesterday, it closed negative with the S&P. And so what we found is when that usually happens, I'm trying to look for the data that tells us how often that happens, but I'll tell you, it doesn't happen that often. And from my experience, when that does happen, it generally results in lower prices for the general markets across the board in the following week. So now we look at the S&P. Now last week, I said we would move down here. See that line? That end target was $420.19. Well, we hit that on Monday, continued through it on Tuesday, bounced a little bit here. See that? And then we wound up right at the target that I set last Friday. Remember, none of this data was here. It's just all blank, chart right there. None of the volume was there, none of the oscillators were there, and I drew that line, and there we go. Now, what does that mean for next week? Well, look closely. As I magnify that, you'll see that that is a bearish engulfing candle. That is the most bearish candle outside of a Marabuzzo candle. But with that said, not only is it engulfing the previous green candle here, but it's engulfing the previous two green candles. So anyone who bought over the past few days are now losing money, and the market is threatening to take that profit from them. So again, what does that mean for next week? Well, it's unfortunate for those who are long, but very fortunate for our option traders who are short. We're most likely going to make money next week on the way down. Look what I'm doing. I'm drawing to the right as I look at the angles on the left. Right? I'm drawing that zip line in the same angle that the market is sold off here and here, and you look at the consistency, the market tends to sell off in that same angle. Now, I do believe we're going to go down and test this support level. Next week is going to be a big week for the technical signals, because if we break out below this low right here from February 24th, we could go a lot lower. So again, risk management is needed, especially for those who are long the market or those option traders who have a positive delta. Be very careful. That is my forecast. So we'll have to wait until next Friday to see whether or not the spiders hit the 412.28 target. All right, now let's move on to the Dow. This is basically the ETF that tracks the Dow 30. we hit our targets from last week again, precisely on Tuesday. And look at that. On Tuesday, we had an inverted hammer, had a little bit of a bounce, came right back down. While this is not a bearish engulfing candle, it is a red candle on higher volume. You see that? So it looks like the sellers are trying to take over in the Dow especially, and I'm going to more or less duplicate my forecast and what I said for the SPY. I think we're going to go down here and test that support level next week. So I'm just going to extend that out just like that, with the angle being the same or almost the same what we saw this week. And my downside target for the diamonds is 322.83. That's DIA. Now let's hop to the Qs. This is the ETF that basically tracks the tech sector. Again, on Tuesday, we hit my target precisely, did the same type of a bounce like we saw in the Dow. But here we go. This is another bearish engulfing candle. This one a little bit more interesting than what we saw in the spiders, because we opened on the high, not too much of a shadow up there, closed almost on the low. So not only is that a bearish engulfing candle, but we were literally pennies away from it being a Marabuzzo, which again, like I said before, is the most bearish candle. So you combine the most bearish candle with the most bearish combination of candles, and that only means watch out below. So next week, the Qs could actually drop below this low. I feel eventually we will do that, but right now we might see a little bit of a bounce. We'll have to see. It's too early to tell, but I am forecasting lower on the Qs, mainly because if you look at the 52-week high-low list on the Wall Street Journal report here, this is WSJ.com. You can find the 52-week high-low list. I leave the link, by the way, in the description box below, and I would bookmark this because I tracked this during the day. Now, at around 11 o'clock in the morning, the New York Stock Exchange was showing about a 3-to-1 ratio to the downside, meaning there were more stocks hitting a 52-week low than a 52-week high, and it was a 3-to-1. And then by the close, it was a 6-to-1 ratio to the downside. 58 stocks hitting a 52-week high. And look at that, 339 hitting a 52-week low. Pretty amazing. Now, look at the NASDAQ. It's even worse. On the NASDAQ, we have 55 stocks hitting a 52-week high. And this number is more dramatic, with 467 stocks hitting a new 52-week low. So that's just about an 8.5-to-1 ratio for the NASDAQ market. And last time we saw that was last week right here. And so what happened? As a result of that weak breadth of the market, we saw lower prices. And this is something that you should be paying very close attention to, because I am getting more bearish by the week, especially with what's going on in Russia and Ukraine and price of commodities and oil and you name it. People are getting stressed out. I have to believe that investors are getting a little bit nervous and moving to cash. Maybe not all out selling, but definitely a lot more investors moving to cash, a lot more fund managers and market analysts getting more bearish. I did not call the beginning of the bear market, but on January 28th, I called the end of the bull market. And as we're seeing now, a lot more people are using bear market in their description of what we're seeing here. So again, I am making money on the way down as well as our members. And if you want to learn more about how to make money in the market, just plug into Market Rebellion. Look at some of my services. You can ask questions. It's fine. There's no high pressure selling anything. Money back guarantees all the way. If you don't like it for a week or a month, whatever, ask for your money back. And that's it. No questions asked. I want to make sure that people are making money and they're learning how to trade the markets using good risk management principles. So that is the Qs. Again, to reiterate, the downside target, 318.28. Now let's look at IWM. We came close to hitting my downside target from last week. Came real close on Tuesday. But guess what? I think we're going to do that next week. Here again, like the spiders, is a bearish engulfing candle that is engulfing the two previous green candles. So all I'm going to do is take that line, I'm going to duplicate it just like that, and I'm just going to move it on over, just like that. I'm duplicating the same angle, the length, duration, the whole thing. That downside target is 191.62 on IWM. I might have slid that a little bit off on pennies there. What was that? 191.56. All right, so it's still close. Putting it a little bit higher, 191.62. And that is going to be my target for next Friday. Next Friday is options expiration Friday for the March monthly options. We tend to have a lot more volatility around that time frame. So be really, really careful. Now, finally, if you are a member of Market Rebellion and you want a copy of my trading checklist, all you have to do is go to the member page right here as a member of Market Rebellion and click on the left-hand side, and you're going to see my trading checklist. It'll come up as a PDF document. It's more like a checklist that helps you determine, what the odds look like for a bullish or bearish trade, a long or short trade, whether it be options or equities. And you just go through the checklist. It's pretty easy. Learning how to read the charts is not rocket science. It'll take some practice, but as you do it over and over again, of course, the idea is to put the odds in your favor. And then when you're wrong, not if, but when you're wrong in picking the direction, you know how to get out with minimal loss. That's really a numbers game, and it helps you focus on the charts so that you're not getting psychologically involved or emotionally involved in that trade and start to make mistakes because you're holding on too long. So that's it for this week. You have a good weekend, and we'll talk to you next time. So long.